This is the only video you really need to watch to understand why everybody is talking about copper right now and to understand where the best opportunities and also the risks lie right now for this upcoming year and the upcoming super cycle in copper that everybody is talking about. Huge, bold claim up top. Yes, I know, but bear with me because in a couple of minutes you will exactly know why that is. We're gonna go into the whole general bull case for copper. What did you miss in the last weeks? And also I'm going to give you different investment opportunities dependent on both your risk tolerance and also the time horizon that you plan these investments for. So stay tuned, this one's going to be worth it. Hello and welcome to another video by HKCM Global. My name is Joe and we are finally taking a deep look at copper. Over the last couple of weeks, many different voices, firstly on X but also on YouTube, have been screaming about copper, and there have been a few good videos out there, but there have also been a fair share of trash information, I would call it. So to bring you up to date real quick, first of all, there was a video that surfaced of Stanley Druckenmiller, went pretty viral on X. Yes, the infamous Stanley Druckenmiller, who averaged a 30% annual return with his fund over, I don't know, was it like 20 years or something? So crazy, wild guy. He made this bold claim that he in his lifetime had never studied such a tight market as copper is right now. Only slight problem with that video was, this video was already from 2023, I do believe, or was it even 2022? So a couple of years old already, and we have of course seen substantial movement in the copper market ever since. So we can take this video and Stanley Druckenmiller's statement as a pointer in a certain direction, but for currently 2026, this is of no use whatsoever. But then another video also surfaced of Chamat, and I'm not going even to try to butcher his last name. This guy right here, you probably do know him. Hugely successful venture capital guy out of California, where else? And he has to say the following about the copper market. And this one is only from the end of January, so a couple of weeks old.
I will pick copper.
Okay, copper.
We are still completely underestimating how short we are in terms of the global demand-supply dynamics of a handful of critical elements that we need. Again, in the Trump doctrine view of the world, that is no longer as multilateral as it was, and we need to have unilateral national security. And if you look through that lens, the asset that is set up to go absolutely parabolic.
So according to him, also in 2026, copper is still a super tight market and copper is set to go absolutely parabolic. And you know who also agrees to him with his claims? The US government. Because as of November 2025, they have added both copper and silver to their list of critical minerals and have elevated the supply for the United States of both silver and copper as being a matter of national security. And you know what the United States are willing to do regarding matters of national security. And you likewise do know what silver has done ever since this happened. So I suggest you buckle up because copper really is in for a wild ride. But then of course, why exactly is this? Is there any numbers that support these claims? What even are we talking about? This is all so abstract. Yes, I hear you, I'm with you. This is what we're talking about. So this right here is a projection from Bernstein. Yes, also a bit older, so it's not from 2026, this is from 2024, I do believe, but still not much changed from these numbers here. So what we can see here is a big shortfall in copper supply from 2027 onward. And you probably already guessed why that is. We need more energy, and energy in form of electricity is transported, usually in copper wires. Because if you want to transport electricity, it is of huge importance that the material that you're using to transport electricity has great conductivity. And there's few elements with better conductivity than copper. So silver, for example, is one of them. Gold as well, both of them. Brilliant conductivity, way better than copper. But I don't need to tell you about those prices. So those are no option. And so amongst the more affordable metals, copper is the way to go. great connectivity, and in a time where we as a society worldwide become ever more hungry for electrical power, both to run AI data centers and also to, of course, power electric cars and transport electricity to the charging stations for electric cars. And if you ask me, this is not a matter of electric cars being overhyped or AI being in a bubble. Both of them are coming. The electrification of the transport industry is coming. Maybe not exactly in the time frame and in the way that some enthusiasts predict, but it is coming. And same applies for AI. I don't know whether we're gonna see the huge AI revolution with millions and millions of workers being laid off in this year already, in 2027, in 2029, or by 2035. But also this one is coming. So we're only really talking about a matter of speed and of time frames here. We're not talking about the question, is it coming or is it not coming? It is coming. So then, of course, the question is, how can you and me participate and benefit from this situation coming up here in the copper market? How can we benefit from the huge overdemand of copper? And so if all of this wasn't enough already, I also brought another chart for you that is hugely interesting to me. Here I brought for you the copper to gold ratio. So you maybe, of course, know the gold to silver ratio, because you can not just track different commodities and also precious metals against the US dollar or other fiat currencies, but you can also track precious metals or any commodity, any stock. Likewise, you can track those against each other. And when you do that, something happens that does not necessarily happen with fiat currencies, because due to inflation of fiat currencies, most commodities and of course stocks as well, capital markets all together, they trend upwards over time. However, when you put one asset against another, for example here with copper and gold, usually what happens is that they rarely trend in one clear direction, but they rather fluctuate up and down in a certain frame or certain channel. And what you can see here, this is a chart going all the way back to 1989, so 35 years almost. 40 years back. I mean, that's longer than I'm even around here on this earth. But anyways, so what you can see here in the copper to gold ratio is, first of all, that we have a core channel here in blue, and we have then additionally to this core channel those upper boundaries, I would say, here marked in red. And usually what happens is that the copper to gold ratio stays within this blue channel in these up and down movements. However, in rare historical circumstances, what happens is that the copper to gold ratio left this blue channel here, and when it did so, in many cases, it at least respected these outer boundaries here in red, both to the upside and to the downside. Then to the upside, there has been historically one instance where we greatly violated this channel and did not respect it whatsoever, but after 3 years of abnormality, we returned into this channel, fell directly through, and then here again bounced off of this lower boundary here to this channel, and then again returned into the channel and saw choppy sideways action ever since. And right now, as we speak, we are about to again exit this channel once again to the downside. And do not forget, the longer we continue to stay in this channel, especially to the downside here, it becomes ever more unlikely that we're gonna go lower still, because at some point in time we're gonna hit negatives here, or we're gonna go below zero. And this of course cannot happen, because we're not talking about fiat currencies, but we're talking about two commodities, one against the other. So here already what you can see is we hit absolute extremes here. We have historically never been this low in the copper to gold ratio. So copper really is overdue to bounce back. This of course can happen in two ways. It can either happen by copper entering into a huge rally, or of course it can also happen by gold just collapsing completely. HKCM Global turns into HyperCM Global. We scan the markets daily, always on the lookout for the latest trends, focusing our attention on the most exciting stocks. That's why we're presenting our new Hype Stocks package. The Hype Stock package delivers analyses of 15 stocks from the hottest sectors right now. We're talking defense, quantum computing, biotech, space, We deliberately focus on stocks with an upside potential of at least 400%. And because trends move fast, this package doesn't stay static either. The selection is constantly updated. If a certain sector or stock loses momentum, it'll be replaced by a new one. This keeps everything dynamic and always relevant, enabling you to benefit from changing market trends. And best of all, to start with, we offer a 20% discount on the Hype Stocks package so that you never miss out on the hype again. The stock package for current megatrends. Go to hkcmglobal.com now and get our new Hype Stocks package. But if you ask me, I find the later less likely than the first option. And so of course, the most important question then is, how can you and me benefit from this situation in the copper market where we can expect a huge over demand that far exceeds the supply in the upcoming years? And therefore, of course, you can just rotate your gold into copper. But again, this then is rather unpractical because even though copper has already risen in price and we do expect further rising prices, copper is still rather cheap. So if you want to exchange, for example, your 1 ounce of gold into copper, you need around 500 kilos of copper, so half a ton, 1,000 pounds. Pretty unpractical. I mean, pretty safe against burglars because nobody is gonna carry 500 kilos of copper away out of your basement, but still unpractical nevertheless. So that then leaves us with two options. First of all, we can just invest into the copper market directly with futures, or of course we can buy mining companies, copper mining companies to be more precise. And I brought a couple of these options for you. So first and foremost, let's start with the copper market, the futures market in copper here. And what you can see here is that we already have started to trend into a clear direction. Out of the lows of 2020, I do not need to explain to you what happened here. So out of these lows at around $2 roughly per pound here again, we already made a 2x, we made a 3x. So we gained 200%, that's a 3x then here, and are currently hovering around the $6 mark here. And what we do expect is this move to continue roughly into the area of give or take $7. And what you also maybe have noticed if you are familiar with Elliott Wave theory is that even though this might be considered a clear trend, it is not, because we see way too much overlapping and the overall understructure here is not impulsive whatsoever. Impulses need to be formed by 5-wave structures following certain rules and guidelines, and all of those rules and guidelines have been widely violated here. Therefore, we cannot do differently but to count this as corrective patterns here. And of course, even in corrective patterns, markets can rise substantially and deliver great performances. But that does not change the fact that overall, the structure that we see here in these markets is corrective. So then, primary scenario, still rising prices into the area of roughly $7 as the most imminent direction that we see in the market. And then from these levels, we do expect a turnaround and a midterm pivot for the copper market. And we do see a roughly 30% give or take correction then here into our target zone, here already marked in green for the wave X here. And from this target zone, then what we do see is another roughly doubling in price here. So that would take us somewhere in the area of $8.50, $9, maybe even higher. And this of course will be refined with more clarity as soon as we have established this pivot point here for the wave X. So roughly another 100% that we see here in the next upcoming move for copper. And if you paid close attention to this video so far, you might maybe ask yourself right now, this guy told me about how tight the market is for copper, and now he's telling me that we only have another 20% headroom here for copper before we're going to see a huge correction. Yes, that's exactly what I'm doing. Why is that? So all of this information that I shared with you here in this video means that this information is public information. This is no super secret knowledge that nobody except you and me knows about. And if something is public knowledge in the markets, you can expect that it is already priced in. Because what markets do, most and foremost, is not display a mirror image of the present moment, but what markets do is project into the future. And it's always a competition. Who can see further into the future? And with then shifting expectations in the markets, also of course price action and market sentiment shifts and leads to great corrections, even though we are inside a overall bull run and a huge super cycle in copper. Completely normal. So takeaway for you, first option, of course, you can go long copper. Right now, maybe not the most favorable opportunity because we only see around 20% more headroom before a correction is overdue. But if we are to meet these levels here between roughly 430 to 480 here on the upper boundary, this is great buy-in opportunities. Then of course, second opportunity, we can go long copper miners. And here I brought for you a little list of the biggest copper miners out there. BHP, we do not analyze this one here on a daily basis, but a few companies that we do analyze on a daily basis and that I brought also with you right here in this video is Freeport-McMoRan, so the second biggest copper producer worldwide, Zijin Mining, fourth biggest, Southern Copper, sixth biggest, Rio Tinto, and then also Barrick Newmont. We also have these all in the miners package, link down there in the description. If you are a subscriber to those packages, you will get daily updates, you will get push notifications for every single scenario that is to change in those markets. You will get entries to our model portfolio. So if that is of interest to you, I'd highly recommend you checking out that link. But here right now, completely for free, I brought for you Freeport-McMoRan, Zijin Mining, and yeah, I also wanted to bring Southern Copper, but we are just doing a reevaluation of our primary account, so this one has to wait for the next upcoming video. And to give you maybe a rough overview already, with all of those mining companies, of course, none of them mines just copper. It is all a question of how much copper they mine and how much other stuff they mine. Because if you are a mining company and you have a mine, what you pull out of there from the ground is not just the pure metal, but it is gravel. It is rock that you then have to crush and you have to extract the metals. And what comes out in some areas is a bigger percentage of gold, and some others is a bigger percentage of iron ore. In some other areas, it's a bigger percentage of copper. But usually it's a mix of different metals. And then so here, Freeport-McMoRan, you can see these areas here on top. This is their revenue that they bring in from copper. So overall for September of 2025, for example, they brought in $20 billion in copper, roughly $5 billion in gold, and then of course all sorts of different other materials, but biggest chunk of their revenue is copper. So Freeport-McMoRan here, what is the overall scenario? And I have to be honest here with you guys, we saw the lows in, again, 2020 with the COVID crash here in April and May, and from these lows we have already seen bottom to top 1,300%. And I really wish I could tell you otherwise, but most of the money is already earned here in Freeport-McMoRan, and same applies for other copper miners. From this point onward, Freeport-McMoRan is not going to do another 1,300%. If they were to do, it would literally put them into the top 10 most valuable companies in the whole wide world. I do not see that happening in the next couple of years. 50 years, I don't know, don't quote me on it, but for the next couple of years, I do not see this happening. So bear this in mind. The greatest gains are already made. And if anyone out there tells you differently, just call bullshit on it. That might be wishful thinking, but it has nothing to do with objective analysis. So anyways then, Freeport-McMoRan. Same here, we also do see a lot of corrective structures here. And we do see, similar as with the copper price in and of itself, we do see roughly another 20% of headroom before we do expect a pivot for the currently running wave Y here for Freeport-McMoRan. And we do see to follow after this pivot of the wave Y a sell-off of roughly 40% at least. It could come to a halt here at this resistance at $64.10, but it could also fall lower. Has to be determined. We have to keep a close eye on this one, and we of course will bring target zones also on this chart here as we move further along and as we establish this pivot point here for the wave Y. And it should come as no surprise to you that we see a deeper correction here for Freeport-McMoRan. Why is that? First of all, Freeport-McMoRan has seen this wild, tremendous rally, and also if a base asset, may it be gold, may it be silver, may it be copper, whatever, falls in price, usually the producers, the miners, fall to a greater extent, and also if it rises, the producers rise to a greater extent. So they are a bit of a leverage on top of the base asset. Then short-term projection here for Freeport-McMoRan. In the short term, so in the direct undercount to what we have just discussed, we see in this most imminent wave B here, headroom of roughly 10%, give or take. What we see then following is a correction taking us here to the low of the wave 4 that can be expected in the area of roughly $55, maybe even $60 again. We will define those targets with more clarity as soon as we establish this wave B pivot high here. And if of course this scenario is to play out, this would dramatically improve our upside potential here, because then we're not talking about just 20% in the upcoming last leg up of this rally, but roughly 50 to 60% even. So watch out for these levels here in Freeport-McMoRan, and stick around for videos on this channel by subscribing and turning on the bell for notifications, and maybe by also grabbing yourself a subscription of our daily market analysis service. But then lastly, another high flyer out of the mining sector has been Zijin mining. Over the last years, they even widely outperformed Freeport-McMoRan. We were just looking at 1300% of performance from the 2020 lows in Freeport-McMoRan. Already absolutely wild. Had you, for example, put 10K into Freeport-McMoRan in 2020, right now you'd be sitting on 130K. That is good money. Okay, then Zijin mining. Zijin mining, again, same as Freeport-McMoRan, the low established in April of 2020 at roughly 227, and this then here is not US dollars, this is Hong Kong dollars, up until the top 1,973%, so 20x. Yes, if you had put $10,000 into Zijin mining in the same time as Freeport-McMoRan turned those into 130, Zijin mining has turned it into 200K. And same story as with Freeport-McMoRan. This is not going to repeat with Zijin mining. Okay, let me be more diplomatic here. Everything can happen in the capital markets, but I do not see it happening anytime soon, because again here, if Zijin mining was to repeat this performance, if Zijin mining was to deliver another 20x from current levels, it would literally be the third most valuable company in the whole world right now. But anyways, what do we see then for Zijin mining? What we do see for Zijin mining is a continuation here of this already started sell-off here from the high at currently 64 Hong Kong dollars 92. We have already dropped around, is it like 5% already, but we do see a continuation here of the sell-off of again roughly 33% into the area of the low 30s here. Same story, we are probably gonna bring a target zone here for this wave 4 pivot point in the near future, as soon as we gather more confidence here with the pivot high for the wave 3. And of course we will define an exit opportunity also here for this wave 3 high. Imminent scenario then for Zijin mining, how will this sell-off play out? We see the sell-off playing out in an A, B, C correction, so rather classical pattern than here, for the very reason that we are here in opposition to Freeport-McMoRan. We do see Zijin mining in an impulsive upwards structure. So no A, B, C, X, Y, Z, whatever count, but a clear 1, 2, 3, 4, 5 impulsive count leading to the overreaching wave 3 pivot high that we just discussed. And we do expect a rather classical ABC corrective pattern here into this wave 4 pivot point at, again here, roughly the $30 level. So this would probably take us even slightly lower than the entry to our target zone that we have just had in the recent past. So this one was hit in November of 2025, and out of this target zone, just from the upper limit here, we have already seen roughly 50% of gains, right now around 45% of gains, so good money made here. No 20x, but this was first of all a way shorter time frame, and we are working here with clear risk management and tight stop losses, because in the capital markets, what is of the most importance is not that you catch every single wild trend that makes you millions, but what is of most importance is that you not lose money. Because if you do a really good job at not losing money in the long term, you will be rich, trust me. And on the flip side, trying to catch every single trend before it unfolds is one of the best recipes to be broke in no time. So then, take care, see you in the next one, bye bye.